Good morning, everyone, and welcome to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Well, what a start, Santo. I mean, it looks like we are in for a good day, but
before that, the HUL results, that's our big debate of this morning. CJ, now I've been a vocal supporter of the sector for quite some time now, and I think going by the numbers that Hindustan Unilever has posted yesterday, I mean, there is a reason why investors are seeking safety in the haven of FMCG stocks. What a set of numbers, beat across all key parameters, be the revenue, EBITDA, PAT, volume growth of almost 6%, and the market was expecting about 2 to 3%. So a spectacular set of numbers there, CJ.
Well, Santo, when the numbers came out yesterday, I saw them after market hours. I was anticipating this tirade of optimism from you, definitely. But okay, I know that the earnings were a scorching beat. But then you look at the commentary, and the commentary was very thanda, man. I mean, it was very cold. It didn't seem like the words that were coming out of the mouth of the HUL managements were just not reflecting the numbers that they had just, reported. And that made me think maybe probably they are being cautious at this point of time. Maybe the earnings that we have seen is just HUL being HUL, instead of the industry at large being at a very good stage. And I think I would just want to point out, some of the things that they have said. They've talked about the margin pressure probably continuing in the second quarter. Now, this is where a lot of analysts and investors were hoping that, with the decline in crude palm oil prices, the recent decline in oil prices, you could see, the commentary turning around there, and that could probably add to the optimism that we have seen over the past few weeks on FMCG counter. But clearly, HUL believes that margin pressure is likely to continue in the coming quarters. Apart from that, even on demand, they did not sound very upbeat, even though they had, estimate beating volume growth of about 6% for the quarter. They said the rural demand still is lagging behind urban demand. So clearly, we have not seen that bounce back in rural demand, and that now makes me wonder what else will we get to hear from other rural companies like Dabur and Marico going ahead. So for me, I think, Santo, the commentary is just not in conjunction with the numbers that we have seen, and that makes me a little skeptical.
Well, CJ, trust you to look for that dark lining in every silver cloud. That said, just have a look at the numbers. So, for instance, in the beauty and personal care segment, revenue growth was almost 30%, which is nearly twice of what market was expecting. And again, in the home care segment as well, the growth numbers were pretty strong. So, CJ, again, on the margins front, I would like to point out that HUL has done a very good job of managing the cost pressures. There's been a dip in gross margins, no doubt, but for the cost management, I think the dip would have been even sharper. And let's not forget, HUL operates in the premium space, so that space is always relatively less immune to inflationary pressures as some of the other segments would be, and that we have seen it very clearly. Besides that, I think the most heartening part about HUL's numbers is that it's managed to gain market share in almost 75% of its product portfolio. Now, that is something you may say that, well, it is more about HUL and not about the sector. Well, we'll get to that very shortly.
That is where I think where the volume beat has also come in for HUL. I think it's the fact that HUL has been able to garner a lot of market share, again, probably from players who are not able to take price hikes to the extent that HUL can. And also probably HUL's being a market leader also gives it that leeway, on the margin front, because it can probably get away with not taking too many price hikes and, take the cost hit while also gaining market share and volumes. I think probably this is just HUL being HUL. I would be extra cautious in trying to extrapolate this into the rest of the sector. We will have to wait and see how the earnings come. But coming back to HUL itself, the stock has seen almost a 15% up move over the past 1 month, ever since the ban on Indonesia on crude palm oil exports were lifted. We have seen crude palm oil prices actually fall considerably, almost 40%, and that led to an uptick. But I feel that profit booking probably could be creeping in soon after these sort of numbers, but also more importantly, the subdued commentary. Plus, don't forget that crude oil prices are still elevated. We are still talking about Brent at $107 per barrel. Crude palm oil prices, in fact, have also been rising over the past 2-3 days, almost a 10 to 15% up move there in the international market. So I think there is cause for caution here on the FMCG space, and HUL probably could be in for a profit booking.
My quick take, probably the market is pricing in a recovery in the rural side during the second half of this fiscal.
We'll have to wait and see on that. Let's That said, let's quickly take a check on how the trade setup is for this morning. Well, looks great. I mean, just like HUL's earnings, things are looking quite good for the market as well. If you look at the Nifty future in HGX, they're indicating almost 100 to 150 point up move on the Nifty this morning. Wall Street entered very sharply, higher, quite sharply higher. On the back of some of the major companies giving a beat on profit, Santo, which is very surprising given the sort of commentary that we have had and the negative macro environment that we have. A lot of companies in the US are coming up with estimate beating earnings, so that is something very positive. And back home yesterday we saw some decent amount of FPI buying, surprisingly, so that should probably also boost sentiment for the trader community out here. So clearly the setup is quite positive, Santo.
Well, the FBI buying is something like sunlight in Mumbai over the last couple of weeks. It's been raining so heavily. Well, CJ, it's been one of the most dramatic comebacks. 10% or nearly a 10% rebound from the lows that we had seen earlier this month.
In the mid cap and small cap, it's been even more.
That said, again, the focus shifts to technical factors at this point in time. If the Nifty manages to hold above 16,400, probably it could attract another set of buying purely on the basis of momentum. So at this point, I think it's advantage CJ.
Thank you so much. That's it, Santo. What else is what are the other stocks on your radar today?
Well, starting with ICICI Lombard again, CJ, I recall that reversion to the mean debate we had, but good set of numbers here, and I think the stock already seems to be showing signs of bottoming out around 1100 rupees. It's been steadily, it's made a double bottom there, so that's the technical part of it. Of course, the numbers have also been pretty strong. CJ, in my view, the stock stands to gain from a positive outlook on the auto sector, because more vehicles being sold obviously means that more insurance policies being sold. Besides that, the company is now trying to strengthen its presence in the healthcare segment as well, something it was not doing in a big way till some time back, and that's what makes many analysts upbeat on the stock. Besides, profitability has been a problem for one reason, and you've seen that in the underperformance of the stock as well, but that again is set to change in the coming months according to Credit Suisse, which has an outperform rating on the stock with a price target of 1430.
I really don't buy that argument that profitability is going to turn around very soon, Santo, from Credit Suisse. Yes, earnings, if you look at it from outside in, looks pretty good for the June quarter, but if you lift the carpet, I think there are a few concerning points about ICICI Lombard's earnings. First of all, if you look at the claims or the loss ratio, clearly that is edging higher in the auto vehicles space. Clearly, that is largely also happening because there are more vehicles on the road, therefore probably more accidents and damages, and therefore you have more claims.
That's a nice way of looking at it.
Yeah, exactly. So exactly. I mean, so therefore I think that is something that a lot of analysts have been pointing about, the fact that rising claims in the vehicle segment, it seems like is becoming an issue. Also in the retail health segment, Santo, you talked about the health segment where the company is trying to expand its footprint. There also non-COVID related claims are also on the upswing, and that it seems could become a structural issue for ICICI Lombard going ahead. So that is something to keep an eye out on. And the result of these two issues, Santo, is the fact that the combined ratio, which is an important metric that people look at when, in terms of the outgo from a general insurance company, that is on the higher side at this point of time. It's about 104% if I'm not wrong. And a lot of analysts are worried that this could probably weigh on earnings in the near term. You look at what Axis Securities has done. They have cut EPS estimates for the company by about 9 to 16% for the next 2 years. Even though they have a buy rating, they are still quite positive on the stock, but they are not so convinced that the earnings upside would be that great as probably you are alluding to. For me, I think these are few internal factors, apart from the fact that they are investing so heavily in retail health, which is going to keep not only margins as well as the also, but their investment yields are also coming lower. So I think there are a few things to be a little cautious about ICICI Lombard. It's yes, a mean reversion could happen, but I don't think fundamentally the story is that strong. Well, talking about fundamentals, one stock that will probably have a lot of relief rally today is Reliance Industries. Well, the government earlier this morning, the news came out that they have decided to partially roll back some of the the measures such as windfall gains tax, the special excise duty on export of petrol, diesel that was being imposed on crude oil production that was imposed earlier this month, as well as probably give a break on SEZ units who are exporting petrol and diesel. Export duties are unlikely to be levied on them anymore, effective from July 20. So clearly that is going to be a boost for Reliance Industry, given the fact that it is one of the biggest exporters of refined diesel and petrol from India. So I think this should also, you know, take away concerns around the Q2 earnings as well, Santo, because of course these measures would have largely affected the Q2 earnings, because Q1 earnings are likely to be a blockbuster set of numbers from the company, but Q2 earnings also, I think the risk would probably subside going on from here, and that should also boost the market going ahead. And I think market may see the flexibility that the government has, you know, shown as also a positive sign going ahead. So overall, given the recent correction, the risk reward is looking quite attractive to me on RIL.
Well, no doubt, there could be some bit of short covering as well.
Yes,
My
exactly.
only concern is that the cut in taxes is not as much as the market would have liked it. So
I mean, market would have not wanted to be there at all, but I think market will take some instead of, you know.
Probably you could see an uptick in the stock today, but whether that can be sustained needs to be seen. Well, Ambuja Cement, the next stock on our watch list. CJ, as always, cement sector, you know, continues to come out with numbers that are not all that great. The situation has changed dramatically from about a quarter back when they were pretty much on the top of the game. Now, in the case of Ambuja Cement, the volume growth was better than what most analysts were expecting, and also the fall in EBITDA was also less sharper than what most analysts had penciled in. But that apart, you know, you're seeing continued pressure as far as raw material costs go, and that is not going to change anytime soon. Besides that, we've seen quite a couple of downgrades also on the stock by Citi and Credit Suisse. In addition to that, there's been some trimming of EV per ton, EBITDA per ton estimates for cement company, for Ambuja Cement. So all this put together, not a very pretty picture. Besides, you know, cement companies in general have been struggling to raise cement prices enough to cover costs. So I would be bearish on this one.
I think Santo, Credit Suisse and Citi are a little bit, you know, late on the downgrade party for cement companies, especially for Ambuja Cement. I think probably a lot of the fear and concerns around cement stocks have already been priced into the market prices at this point of time. What I would, you know, suggest, what I would look out for is the fact that the volume growth was very, very impressive. I mean, almost at 15%. I think it was ahead of almost most analyst expectations out there. And net profit also was quite good, given the fact that they've been able to manage costs considerably well. And as you pointed out, that fall in EBITDA, therefore, was much lesser than what the market was going for. I think overall, if you look at what Citigroup also had to say, they said that cost pressures as such seems like have peaked in the first quarter, and largely because you're seeing the sort of decline that we are seeing in global commodity prices, that should start percolating into the earnings in the Q2 and Q3 going forward for cement companies. So I would suggest that the max pain or max fear on margin should be behind for the market. And Credit Suisse, in fact, has actually, even though they have downgraded a stock, they've actually indicated that they expect better EBITDA per ton from the company in 23 and 24. So clearly, there seems to be probably a valuation issue more than fundamental issue. I don't think there are too much concerns about fundamentals. Probably just the fact that the stock had run up so much in lieu of the Adani acquisition that a lot of analysts are skeptical. Well, one last stock on my radar would be Control Print, now from the small cap space. Clearly, not a lot of people were betting on the stock, but the earnings beat yesterday was quite spectacular. If you look at the net profit and operating profit, they comfortably beat street expectations for the June quarter, and record revenues along with, you know, expansion in margins clearly makes this one stock that I'll be watching out for, Santo.
Well, with that, the market has opened 213 points up on the Nifty, and it's above 16,500 now. That's quite a big jump.
I think I bet it is led by ONGC and RIL, if I'm not wrong.
Just less than 150 stocks are down, while you've got close to 1,750 stocks that are up. The Sensex is up about 615 points. So a tremendous rally there. HUL though is under pressure. It's flattish in early trade.
If you look at the mid-cap space also, Santo, I think the mid-cap space is underperforming a little bit. The Nifty mid-cap 100 is up about 0.8% at this point of time. But the metal names are doing quite well, Santo. JSW Steel, Hindalco doing higher by about 1.5% each. Even Tata Steel is higher for the day. Tech stocks, some of the tech stocks names have also come up. Tech Mahindra higher by 1.3%, and Tata Motors doing quite well, 1.2% at this point of time. Watch out for, of course, IndusInd Bank later in the day. They will be coming out with their earnings. later in the evening. So that will be one number to watch out for. Although Wipro is another stock that is going to come out with its earnings, but that will most likely come after market hours. But looks like a very healthy start for the market, and hopefully it continues.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do share your comments in the feedback section below.
And as usual, guys, keep following us on the social media links at the bottom of your screen. And for the rest of your financial news, I don't need to tell you, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live at 3 p.m. with all the day's action.